So let me go ahead and start off by saying I thank all of you for being here today, taking part in this not new members training, but this free currency pair analysis training. I really appreciate all of you being here. All right. And I know that all of you are coming from, all walks of life, all across the world, from the four corners of the world. And I really appreciate you guys doing so. Now, I want to let you guys know that this training was motivated by two individuals who are here today, both of them are not a part of the So Darn Easy Forex movement. So I don't want none of you to think that it was motivated from within. It was something that it was on my heart to do for the longest, but I decided to go ahead and have this training free for everyone after speaking with those two individuals. Now let me explain. I haven't had a free training since like early this year, maybe late last year sometime. And, and I always had them for a long time, but I decided to, when I shut down my Millionaires Forex group, which was actually originally created on Facebook, I didn't like the way Facebook ran things. I didn't like having all my content on Facebook. So I decided there's a need for this type of training outside of there where I can have control over what happens. If Facebook went down, there goes all my content. Heck no, I'm not going to do that. So I decided to shut down. I revamped everything, redesigned everything. The movement was born. And on June 1st this year, I opened up the doors and this thing took off. Now, of course, along the way, you had the naysayers, the non-believers. Actually, some of you who are here, some of you are probably here to actually get a sense of whether it's affirmation or confirmation as to, what it's all about. I respect that. But when I dropped the So Darn Easy Forex movement, when I opened up the doors, I didn't have time to take advantage of free training. Many people asked, and I had to shoot them down and say, listen, with the creation of the So Darn Easy Forex movement, I don't have the time to do it. But it's been on my mind. And after speaking with Bianca and Joel, I knew it was time for me to do it. When I spoke to Joel, he was, and I let him know this. I'm very straightforward with my approach. I let him know. I said, listen, you are a little aggressive with it, but I realize your passion. Your passion overshadows your aggression, so it's okay. He began to become a little apologetic, and I had to stop him. You don't have to apologize. That's your passion at learning Forex. And he sent me an email and wanted to apologize again, and I said, you know what? Before we got off the phone, before we got off of Skype, he almost wanted me to stay on Skype. I could tell, when you want to get off and you have things to do, and I had people call me and email me, and I had to respond to these folks. And he really didn't want me off. He wanted me to make sure that he had something etched in stone by the time we got off. And I said, listen, I want you to know, I'm a man of my word. If I say I'm going to do something, call it done. You don't have to sell yourself. I'm telling you, I'm going to do something for you, but you have to trust and believe me. I know because he had told me a story. He was taken out of his money. The person just became MIA on him. And I said, listen, don't worry about that. That was then. I'm going to do something for everyone. But I don't want to commit to doing something for you and don't offer to everybody. So I need to offer for everyone. Then I spoke with Bianca, and her story was very, very impacting. I said, listen, I'm going to do something. I spoke to someone else. I'm going to take care of you all. And a day later, the idea was presented to the world, and you all are here right now. So I really appreciate you guys tuning in. Now, let me also let you guys know this. I mentioned online that it was for 100 to maybe 200 people. Of course, the numbers were exceeded a long time ago. There were plenty of people who had presented this opportunity to their friends and family. I never once decided in my mind that it was just going to be 100 or 200 people. I was never going to cut it off. That's just what I said, because I wanted people to feel the urgency, and I wanted people to, I never told anyone that it was the quota was met, that the capacity had been filled. I never told no one, but no one knew that it was already breached or exceeded. No one knew that. So for those of you who continue to send me emails, say, hey, I want to see, I think that it's probably already filled up, but I want to see if I can get on. Of course you guys can get on. This is for everybody. I'm not taking just 100 people. This is a movement for everyone. So I just want to let you guys know that while a lot of you thought that it was already to its capacity, it wasn't. This was for everyone. So, hey, what's going on, Nicole? I want to now tell you guys, I welcome all of you to this training. My contact information is here. As you see, Scott at SoDarnEasyForex.com or SoDarnEasyForex@gmail.com. My number is 619-496-9049. You guys can contact me whenever you want. It doesn't matter. Just realize that just like you all are looking for information, there are hundreds, thousands, plenty of people all across the world looking for the same information, finding me for the first time today. There's always people like you. So I want you all to have patience, because that's what I teach my students. Have patience. Do not just, I'm going to hold that for the training, but just know to have patience. If you reach out to me, I'm not running the So Darn Easy Forex movement with 4 or 5 other people. It's just me, and I'm doing a heck of a job doing it. So know that I'm one person, but I can take care of the multitude, but you just have to be patient. So let's go ahead and get started. I'm going to go ahead and do one more roll call to see who all we have here, and then I'm going to get started, because I know you all are getting ready. I know the markets are about to open up real soon. For some of you, the markets actually already open, depending on what broker you're with, but for others, it'll be an hour or so. So let's, like I said, this is being recorded, so you'll be able to check this out on YouTube. It'll be on my channel. So I just want to let you guys know that, and let's go ahead and get this thing started. And you all can hear and see, you all can hear me clearly, and you can see my screen, correct? All right, great. Great. Now I'm gonna go ahead and start with a little home rules of my training. If you guys don't already know, everyone is being muted. Everyone is muted unless given the opportunity by me to speak. All right. Now, that's the way I do all of my training. All of my training sessions are, everyone is muted. Everyone who's a part of the training will have their end of the training muted. You will not be able to, you will not be disturbed by any other students, background, toilet flushing, talking to the cousin on the other end, watching television, a football game, whatever. You won't have a problem with that. That way, while we're in our training session, as a student, if you were a student of mine, when you're there to train and be trained, you're getting your 3 hours or hour and a half or 2 hours of training without being disturbed. All right, you're a student to get your money's worth, not to waste your money hearing someone else. That's rude. I would not allow that. All right. Very straightforward. I'm very direct with mine. I just want you all to know what you're dealing with. In terms of questions, you guys, most of you already see here, you put questions in. When I get into my training, I have my questions bar open right now. When I get into the training, I don't look at it. Every so often I might open it up because of something I might say. I might want to see your reaction. But typically, usually I don't have it open. So if you ask a question and if you ask a question and if I don't respond, it's not that I'm ignoring you. It's because I don't have my questions bar up or column up. And then with so many people responding at random, it'll get lost in a shuffle. So do not take anything personal. The question that the one thing that I want to let you guys know as a student, the way I have this ran is that at the end of each training set, now you can ask questions throughout the training session, but I want you all to know if you ask a question, I might not see it. So at the end of the training, when the training is over, you can always email me. All right. Now, of course, that's for members. You can email me. Now, if you're a non-member, you can email me. Just know that as a member, you hold an exclusive position. I take priority in my students, not in non-members. I have to be upfront and straightforward. That way, there's no confusion. All right. I think that's very fair from a business standpoint, from a time management standpoint. So let me see. I think that's about it. I just want to make sure no one is feeling slighted or like I'm ignoring them. So let's go ahead and let's get started. There are a few things I want to touch on that's going to make sense. That's going to be a segue into how we get started. And let's go ahead and do it. All right, so the questions bar is out of the way. You guys can see my screen, correct? Before I get deep into this. All right. Great. And like I said, I welcome all of you to this training. Expect, and I'm going to use this word a number of times tonight or today. Expect to take away knowledge from this training. All right. For those of you who are already students of mine, you already know, you already know what to expect. So expect it. So let's go ahead and get started. Let's get started. All right. Move this out of the way. And as you guys notice, we're on the AUD CAD. All right. And I want to throw something out there first. All right. I want to throw something out there to let you guys know. Whether or not you know this, I'm going to tell you. All right. And I know that a lot of what I teach, my students can tell you, a lot of what I teach go against the grain of what others might say and believe and have you think. All right. I don't get caught up in what everyone else says. It takes discipline to believe in yourself and believe in what you know so that you don't get caught up in what everyone else is doing. If we were all together in an area and I got a couple buddies of mine, family members, Clarence, what's up, Clarence? And we said, we screamed out something that could get everyone's attention and just started running, there's a chance that more than half of everyone will start running in the direction that we're running in. Because that's what happened. People, they just follow the crowd instead of really stepping back and saying, what's really going on? Let me see if there's any danger that's taking place. Could it be that everyone's running because they're fearful? They don't really know. They're not in tune with their emotions. Could that be what it is? They're just going off of what they see, what's right in front of them, instead of looking at things from a stepped back point of view, if I will. You guys get what I'm saying? So when you step into the So Darn Easy Forex movement training, you start to have things explained to you in ways that even someone who thought they knew it all would question themselves, because it's a lot deeper than just surface. We're not just going off of what Baby Pips says. We're not just going off of what these other sites says. I have my own knowledge, whether it's something that I just picked up on yesterday or something that just came to me as an epiphany. Regardless of the fact, I don't listen to the crowd. I go off of what I know to be true. All right. So what I mean, the reason why I'm saying this is this. The market, the Forex market, is not 100%. Get that out of your mind. So if any of you are looking at Forex, or you're looking for Forex to be that financial vehicle that will allow you to never take a loss, I'll kindly ask you to leave this training right now, because I don't want to sell you short of your dreams. And I'll give you a moment to actually leave if you so choose to leave. But of course, it's a lot deeper than that. It's not about you leaving. It's about you learning something. All right. Now, keep in mind that we're all losers. Now, and I said that with my eyes closed. We're all losers. It's just words. People say a lot of stuff. It's just words. But do you believe that you're a loser? So know this. We're all losers in a sense. Now it sort of gives off a different feel. As I continue, you'll realize why. We're all losers in a sense because as soon as we put money inside of our trade account, we've already lost a percentage of our capital. Why is that? Brokers take our money as soon as we put it inside, even before we place a trade. So do not get caught up on the fact of trying to win it all, because sometimes you just have to sacrifice a little to gain everything. All right. So I will be the last person to tell you that the So Darn Easy Forex strategies or training, let's stick with the strategies, are 100%. There are no strategies that are 100%. I'll say that again. There are no strategies that are there. There are no strategies in Forex that are 100%, except one. And I will be the last person to tell you that about Forex. Like, my strategies, no, get out of here. My strategies will help you increase the probability, but they're not 100%. So again, if you're looking for a strategy that's 100%, and if you think that all this time I told you that it's so darn easy, baby, because it's 100%, I'll ask you, and I'll kindly allow you to leave, because it isn't 100%. Now let me also say this. the bottom line is this. I have a great level of wisdom of the market, all right? And if you all can follow my discipline, all right, the things that I put out on YouTube, if you can follow my discipline, just the surface stuff that's put on YouTube, if you can follow that, create the habit of following just that discipline as a student, you continue with the same discipline to the T. You do it over and over again. You can find success in Forex. Unfortunately, a lot of people here, outside of here, they just look at the market, look at the chart. They don't have a system that they follow. They're just all over the place. Usually that's because they're all over the place with their knowledge. And because of that, you become scatterbrained. If you're being taught to do something, but you don't know when or why to do it, you might as well take a pistol with one in the chamber and have at it. Now, you all can still hear me, right? All right, great. Now, let me say this. Let me say this. There's a method. There's a method to, yes, Steve, we actually started a half an hour ago, but you're fine. We're just really, I'm priming everyone, getting everyone ready. So you're fine. You're fine. Let me say this. There's a method to everything that I do. There's a reason why that I had this training, reason why I was motivated beyond the fact that I had two motivated people who are interested in joining. Of course, they join whenever the time is right. But I thought the time was right to do it now because we're right before the holidays for most people in the States. And what better time to offer a way for you to do something, have time to make a withdrawal for the holidays. So everything's done, everything's orchestrated well, timely, well thought out so that everyone could benefit. All right. Now, I do have one question before we get started. How many of you are short-term traders at best? Or at heart, rather. How many of you are short-term traders? Meaning you scalp the market, meaning, you know, you might just trade for an hour and you're done. You know, how many? And it's okay. It's okay. If you're a short-term trader, it's okay. There's nothing wrong with that. I mean, you guys have seen my video, I'm sure, where, you know, scalping, there's nothing wrong with scalping. I choose not to scalp anymore, but there's nothing wrong with scalping. Scalping is, it's a, you know, I've generated 863 pips in 12 hours, and it's documented. And it's possible. But my goal is to show you all the benefit of taking the knowledge you have in the short term and making a transition over to the long term. All right? Because let me just explain something to you guys, and hopefully to you guys and gals. Hopefully you all could overstand what I'm about to tell you and not understand it. I want you to think about what I'm about to tell you. When you look at the small time frame, it's just like looking at, now I want you to put your imagination, turn on your imagination. All right? When you're looking at the small time frame, it's like looking through or looking out of your peephole that's on your door. As far as you can see through your peephole is maybe across the street if you're in a house, or across the hall if you're in an apartment or a building. But when you look at the market from a long-term perspective, trading on the higher time frames, it's like being inside of an airplane, taking an aerial view over the market. You can see everything. All right? If you're driving down the road, you only know what's in front of you as far as you can see. You don't know what's around the corner because you haven't gotten there yet. But I can guarantee you, if you were looking at it from an aerial view, a long-term mindset or perspective, you could possibly see what's to come because you have enough heads up. You can put together some type of preparedness, some type of plan to get you through that road down to the next block or so. Do you guys realize, and can you see what I'm talking about? So that's what I want you all to think about. And it's okay. If you are a short-term trader, it's okay. I would just like for my students at least to take advantage of the long term. Stop babysitting the charts. You don't have to babysit the charts. The thing about Forex trading is you don't really know where the market's going. I've had a few students say, hey, because my thing is I don't hold my students' hands. I don't hold their hands. I provide trade alerts, but I don't give you a signal. I'm not creating a robot or some kind of bot or anything that's going to give me a signal that's going to help me send it out to people. I'm not doing that. I have a lot to lose to put a signal out, and take a risk in someone not knowing how to do it. See, my love and passion is with training, not holding no one's hand. I have a daughter for that. I have to guide her along the way. I don't have time to guide people, I don't have time to guide. I don't have time to tell someone go long, go short, when the market isn't all too, there's no guarantee. So what I want you all to be able to see is that if you're looking at the market from an aerial view type standpoint, you can see everything. You make your decision based on everything, not based on the last hour or the last 5 or 10 minutes. Now, I'm not going to get too deep into all of that because I know some people are not going to, they're not going to receive it and ingest it, not digest, but ingest it well enough to have it make sense and resonate and vibrate within them. it's just going to bounce off, because that's what vibration does. If it's not in line, it's just going to bounce off and go somewhere else. But when you can take in the vibration, you can take in the information, when you can ingest it, use it, apply it, that's when you realize, you know what, this is so simple. Why didn't I think of this? So let's move forward. Now, trust me, I'm priming you all. I'm like that throttle. I'm priming you all, getting you all primed up so we can get to the charts. But there's a method to my madness. Don't get lost. Follow me. Your perception of the market is going to take a huge impact in your trading. All right. Something that I tell my students, I echo this all the time, is that if you want to trade on a short term, if you want to trade short term, expect short money. If you want to trade long term, expect long money. So what is it that you want? That's as plain as it gets. I would rather not babysit the chart, trade long term for long money, and have my freedom than trade short term, babysit the charts, just to only get a small residual. I said residual for a reason, because all of us know what residual means. It's not necessarily expected, but you know it's going to come every so often. It's a residual, but it's a small residual. I never said short-term traders would never win. I'm just telling you that there's a better way where you can make more and have more time to do what you want. And it builds your confidence. For those of you that do not know, psychology is very deep in Forex. Forex is all about numbers. That's all it is. It's about numbers. When you start to overstand numbers, you start to realize the game. It's a reason why everything we do is based on 1 through 10. If you can count from 1 to 10, you can count as far up as you can possibly think. There's a reason why they teach us in grade school addition, subtraction, multiplication, and division, because that's all you need to learn any other parts of math. I look at Forex like I look at algebra, geometry, pre-calculus, calculus, all that stuff. If you can learn the basics, you can learn the advanced course. Because you don't do one without the other. You have to crawl before you walk. Unfortunately, so many people are trying to run already, and you don't even have a solid ground to run on. That's the thing. You need a solid ground to run on before you run. My daughter, she's 2. She runs and jumps in the bed, runs from one side to the other. But she knows her limits. She knows when she gets to the edge that I need to be careful. You can teach a child to do many things. They just absorb everything you have around them. They know what you tell them. They know right from wrong. I tell my daughter all the time, Genesis, stop doing this. Genesis, stop doing that. It's a method to it. I want her to know that she cannot do everything she wants to do. There are limits to certain things. Be careful. Don't go too far. Stop. Slow down. Just be careful. So when you start to think about all this and everything, you put it all together, you start to realize that, you know what, how can I get to the next level of Forex? Everyone wants to make and generate currency. But do you really have a system or a plan? Because the last time I checked, Forex isn't, based on what they say, Forex is not easy. So what they tell people, they trick you into believing trade off the smaller time frames, because the smaller time frames are based on 1, 5, 10, 1, 5, 15. So people in their mind, they think that I can make all this money in 5 minutes. That's not true. The same 1 pip or 10 pips that went up on the 1 minute is the same 5, 10 pips that went up on the 1 month chart. So many people believe that trading a day chart, it moves too fast. Let me reiterate what I just said. If it moves fast on the day chart, it moves fast on the minute chart. Because if you look at every time frame, the same price point on the monthly, it's the same price point on the minute. The only difference is the currency pair or symbol you're trading. That's what makes it fast or slow. All right? I'm going to jump into something really quick, and then I'm going to take it back to this. I'm going to jump into something really quick. And you guys can still see my screen, correct? Let me see. Those of you know that I trade the GBP NZD. All of you know that, right? You all know that I'm in love with the GBP NZD. That's my pair. I invite you all to fall in love with your pair. It could be the GBP NZD, long as I don't see you running up on her when I'm right there beside her. You know, you can have her when I'm not there. But when I'm in a room, stay far away from her, because that's my pair. I invite all of you to find your own pair. I want you all to find your own pair. All right? I'm going to show you all something based on my theory on why I feel long-term trading is much more profitable and it's powerful. And I just want you all to realize what you're passing up on when you trade on the smaller time frames. I just want to show you. I'm going to put a couple lines here, and I'm going to use my other system to measure. Now this is on a daily time frame. Let me move my trade panel. For those of you that don't know, you can click this arrow here to reveal and hide your trade panel. Just in case some of you are like literally brand new, you might not know that. So let me drag my crosshair, and I'm going to measure from here down to this line. You have almost, let's call it 1960 pips, or 1960 pips, or 19,609 micro pips. Whichever way you want to call it, it is what it is. But the way I read it, 1,960 full pips. All right? Now, when I drop down to the minute chart, now you know these lines are not, they were not created in MT4. They were created outside of MT4. So they're going to remain stationary. They're not like my horizontal lines that I plot on. They would be at this same price point regardless of whatever time frame I'm on. We're not going to use this. So we're going to measure between these two and see how much it is. Now, it was 1,960 full pips there on the daily. Let's see what it is here. I'm going to give it a half a pip more. I'm going to call it 24 pips. For if you have this size candle, if I created a candle of this size, and I'm going to draw a candle so that you all could realize what it is that I'm talking about. This is a candle. If this candle from here to here on a minute chart will give you only 24 pips, and I'm giving it a half a pip, this same size candle on the daily chart on the GBP-NZD pair would give you 1,960 full pips. Amazing. Like John Madden used to say in the earlier, NFL football games. So if you look at this, it goes to show why babysit the smaller time frames when you can have so much more by looking at the larger time frames. Let's go to the 30. Now let's keep it. Let's go to the 5 minute. Let's measure. Okay, now, all right, we got a little bit more. We got like 40 pips, 15 minute. Let's call it 100 pips, 30 minute. Now, you guys see what I'm saying. You see how it's going up more and more. But it's based on that one size candle. You're passing up on so much. Why take a piece of the pie where you could have the pie? Why take just a little piece? Why take it from here to here when you can have all of this? All right? You don't have to get faked out in all the pullbacks. You can have the entire move. See, I want moves like this, long moves. I want moves like this that happened in September 2015 or that started in April 2015 and stopped in September 2015 and then started plummeting and then dropped 7,000 pips. That's what I want, this type of move. A lot of you couldn't fathom that type of move because your minds only allow you to think on a smaller time frame. You can only see as far as a portion of this candle and not this entire move up. Very important. Can you guys see my screen and hear me? All right, if you all cannot hear me, for those of you, well, it's one person that cannot hear me, you may need to shut down and reconnect. Because when no one can hear, everyone will say, I cannot hear. All right, so let's go ahead and, let me see, 1 second, you all. Let's see. All right. All right, let's go back. I'm curious. How many of you think trading the Forex market is complicated? And it's okay if you believe it is. It's nothing wrong with that. I know, you know, when I first got started, you know, I thought that it was extremely complicated. One thing that I want to let you all know is that, honestly, I don't know most of you from anywhere. Most of you, probably 75% of you who are here today, are not even members of the So Darn Easy Forex movement. So I don't even know you beyond this training or in the email that was received prior to you all gaining access to this training. But one thing I want to let you guys know is this. I honestly believe that all of you can learn to trade the market. I believe that for some it's going to take some work. You all going to have to see the market. You all going to have to go through training or you know, look at the charts more and more and more. But I believe that all of you from time to time have seen a setup in the market and psyched yourself out of getting in or staying in. Some of you have seen the market in its plainest form and you said to yourself, excuse me, you said to yourself, this is a move, I'm getting in. And you got in, but you got out too early. Or you just didn't get in at all because you're so afraid of losing. You know, your confidence isn't there. The best teacher is failure. So if you make a mistake in the market, learn from it. Do not just give up. You have to learn from it. You have to build that confidence, because without the confidence, if I wasn't confident in what I know, there's no way that I could make videos every day and put them on YouTube. There's no way that I can sit here and do what I'm doing now. There's no way. So it's very simple that with repetition comes confidence. And once you have the confidence down, coupled with the proper discipline, with, of course, the proper strategy and plan, shut the game down. All right? So I believe that all of you at some point have seen a good move in the market and you got in, you did well. Some of you have seen a good move in the market, you got in, you got out too soon. Some of you have seen a good setup in the market, you got in, you stayed in too long. Some of you just don't get in at all. You know, and that's where the problem lies. I want you all to know that, and this is the end of my, if you want to call it, the priming before we get into the actual currency pair analysis training. I want you all to know that this market will chew you up and spit you out if you cannot weather the bad days. So it's best that if you're just starting out, or you do not know how to trade consistently, let's say if you don't know how to trade successfully consistently, then you should be practicing on demo. Do not practice with your real money. Now, I know some people will say, well, I don't have the same type of emotion when I'm trading demo. That means you have to learn to treat it like it's your live account. Now, I say that because I've had a student who I talked to recently, and let me think. I'm actually trying to remember if this was a student or if this was someone that I spoke to. Nonetheless, you guys know I talk to a lot of people, and sometimes even the voices, I get mixed up with the voices, but I've talked to someone. I'll say I talked to someone this week, and I apologize for if you are the person who I spoke to and you are a member, and I may have forgot the fine details. I do apologize, but I want you all to know this person had actually traded on the market, traded live, and traded demo. Open up the same trade on a live account and a demo account. Close out the trade on the live account because you know what? I actually know who this was. Now I remember. The guy that I told you about early on, his name is Joel. He's here right now. The guy that motivated me to have this training after I heard his story. I told him, I said, listen, Joel, apparently you can trade. She was trading the GBP NZD. He put a trade in on demo and live. Closed out his trade on his live account and let the trade on the demo account run. I cannot remember if he said that. I think he said that he happened to go back to it and realize that he one second, you guys. Okay. I wanted you guys to know that he did not believe in his move. He didn't have the confidence that the market would go in a direction that he saw it going from the get-go. He panicked. He was afraid. He shut down his trade. I believe he told me that he forgot about the other one, happened to go back to it and realized that, wow, if I had just stayed in. That's what happens. So I want you all to know that that's something that you all have to build, that confidence. When you build your confidence, you start to trust yourself. Start to trust the move. Let the trade, let it do what it do. Let the trade manifest. Let the trade mature into the move that you saw it maturing into. That you saw it maturing into. That you saw it maturing into. Because had you not saw the move originally, you would not have even thought of getting into the move. All right, so I wanted to share that with you all, and I wanted to share that with you all and just let you guys know exactly how you guys could benefit from trading, building your confidence, trading at a higher volume. No, not at a higher volume. Trading at a higher time frame, but yet trading at the proper volume. All right, that will help you remain in the market. A lot of people who trade short term, they don't have the discipline to trade at a good volume. And when I mean good, not at a high volume, I mean good that's respectful of the amount of money that's in your account. Some of them, because they want to get in and out of the market, I'm going to make a quick $200-300, go get these shoes, go get this, because they're living in the day, the moment. They don't have a plan set up that's taking them from now to a couple years from now. It's all about, what can I get right now? I want to go and get this. So let me go ahead and ramp up the volume real quick so I can make this money, and then I can go and get what I want in, like a week's time. So we don't do that. Instead of turning up the volume on just 5 or 10 pips and risking it all, trade on a higher time frame at a good volume and just let it just ride. All right. So let's go ahead and get started. We are 1 hour and 2 hour training. And no, if you are trading on remember what I told you guys. Remember what I told you guys and gals. If you're trading on a minute chart or the monthly or anything in between, the same price that's seen on the minute chart is the same price that's seen on the monthly. So it doesn't matter if you well, let me back up. I don't want you to believe that you need to trade, you need to have more money in your account for that higher time frame. The higher time frames is what brings you the money. See, they, quote unquote, have everyone confused in thinking that you need more money for the higher time frame. No, or you need to trade on a smaller time frame because you have a little bit of money. That's just the opposite of what it is. See, you have to learn to unlearn all the garbage that's being put out and regurgitated and circulated on the internet. Don't get caught up in the matrix. Don't get caught up in it. It's a lot deeper than what the surface would reveal. See, a lot of people are just surface. They really don't know. They just talk a good game because that's all they know is what they've been told or what they have access to or what they are privy to. They just go with what everybody else says. They really don't know. I've been told plenty of times that, man, I'm being trained over here and people don't even, I can't get answers. I can't get answers to my questions. What? But that's not the direction that I'm going to take this training down. I just want you to know that do not believe everything you hear. In fact, question some of the stuff I tell you. People, until you feel like the person that's training you or until you feel like the person that you're getting information from knows what they're talking about, just have one eye open. You know, you must take the time to do your due diligence. And sometimes you just got to sit down and listen. Don't get caught up in the hype. Don't be easily blinded by the foolery jewelry, if you know what I mean. Because there are so many minds out here that are not strong enough to look beyond that. That's just surface stuff. Not looking for that. We're looking for longevity. And I'm going to tell you guys one thing. For those of you who enjoy taking signals, that's fine. But do yourself a favor. Get some training in your life. I'm not telling you through the So Darn Easy Forex movement. Of course, I have room for you, but I'm not telling you go through me. Get training through someone or some group somewhere. Because if you're only getting a signal, you're not building any knowledge. The trade-off should be, if anything, knowledge. You want knowledge. If you have to pay for it, you want knowledge. All right? I don't want to pay for no signal. Because if your business collapses, where does that leave me? I still don't have nothing. I have no signals, and I still don't know how to trade. So just be careful, you guys. If you guys are here, you're privileged to be here right now. Even if you're not a student, you're privileged to be here. All right? Now, one thing that I will tell you guys is this. This is what I want you guys to know. Before we get into our training, this is the last thing I promise you, because I have a lot of information I want to give you guys, and I care for you guys to know something. All right. Let me tell you. People are speaking on the referendum that's supposed to take place. There's one, if you want to call it a strategy, or if you want to call it a thing, quote unquote, that is 100% in Forex. That's trading during a catastrophic news event, or a news event that you're aware of, that you know that's going to present some type of jump or jolt in a market. Like a couple weeks ago, we had the election. It wasn't necessarily a news event that was on forexfactory.com, but it was something that the entire world expected, or had expected the market to react to. And it did. So there's one way. Well, that's the one strategy or thing that's guaranteed in the market. Trading the catastrophic news event. The way that you do it in any news event, just like this right here. This right here, August 24th, 2015. I can put my thing on it if you don't believe me. August 24th, 2015. This was nothing more than the bailout. The market, GBP, NZD, went up, let's call it 1,700 pips. Now this is the daily candle. So by the end of the day, the market backed off 1,000 pips roughly. So if I might inform you, when you are 1 second, you all. Let me look at something. When you are looking for ways to trade that's guaranteed, there's only one. And the one thing that's guaranteed is that when there's a catastrophic news event, it's going to take the market either way up or way down. And the great thing about it is that depending on the direction that it goes, if it goes all the way up outside of normal trading zones, it's going to back down. It's going to come back. By the end of the day, it's going to come back. That's guaranteed. All right? Now, that's something that I want you guys to know. Keep in mind. All right? Keep that in mind, because depending on how the market responds, it could send the market haywire. And I don't want you all to fall victim to that. All right? Does that make sense to everyone? All right, great. All right, let's go ahead and get into this. Let's go ahead and get into this. Now, one thing that I want to say is this. As we get started with the training, one second, you guys. There we go. All right, so as we get started with the training, I want you all to know that there's no guaranteed way of knowing exactly where the market is going. All right. We as traders, we make our assessment based on where the market is currently and where it's been. But the market, you could have everything set up perfectly. You can have, you will probably know, they say when this happens and this happens, that this is going to happen. And then all of a sudden, the market doesn't respond the way that you had expected. You may have an engulfing candle, a bullish engulfing candle, and the market might go down. My question would be then, where was that engulfing candle at? Because that's what really matters. So that's just another tidbit of information I want to give you guys. Catastrophic news events are those that like really move, like, you know, hundreds of pips, over 1,000 pips sometimes. All right, so let's go ahead and let's get started. All right, now one thing that I like to do is I want you all to know that the market on my chart, I have white and red candles. The white candles obviously are the buy candles and the red are the sell. All right. We know that in Forex, the market only does two things, and that's guaranteed. The market only goes up and it only goes down. That's it. So my question is, if the market's only going up and down because you only have two directions to trade in, why are so many people struggling in the Forex market? So many people struggle because they don't know the mechanics behind trading the market. And that's what burns them all the time. All right. I'm going to remove this information here. You guys can catch this. You know, my information is everywhere online, so you can catch this online. I'm going to remove it for, well, no, I'm not going to remove it. Actually, I am. I'm going to get rid of it. I'm going to need this room to look at the charts. Now, looking at the charts, what I like to do, let you guys know, everything is done off of the daily. Everything. Everything is done off the daily. I'll say it again. So, looking at the daily chart, nothing lower than the 4 hour, but definitely the daily. All right. And what you want to do is you want to realize your supported and resisted areas. You want to make sense out of what's going on in the market. You want to look for them common areas that the market bounces from. All right. Now I see that this market has a tendency to stall or bounce at this level. Came here, bounced up, came here, look where it's at. So it's likely to believe that the market, although it pushed to this point, came down, pushed higher, it came back down, came up, came back down. It's likely that this would go higher. But the fact remains is that the market is sitting at support. So regardless of the direction it goes in, whether it doesn't respect this level and goes down or whether it actually goes up, make sure you get in when you have a signal to get in. Because looking at this, we know that, well, it turned around at this point. See that? You see this? You see this? So we know the likelihood of where the market could go. And we know that these levels are good based on us going back in time. We know that we stand a chance if the market actually goes up I mean, we have a couple hundred pips that they can go to, or even here. But regardless, this is what we have. Now, let me look at this, and I would have to believe that more than likely it'll probably go up. But just keep in mind that you still have to have a signal. You have to have a reason to, if you have a strong enough reason to get in, then you get in. All right, that's for the AUD CAD. AUD Swiss, I don't really care for the Swiss pairs because they have very low volume. But some of them, when paired against, you know, another currency pair that, or another currency that's pretty volatile, might give it a little boost. And this one here, you notice, looks like it's been at this level 2008, 2011, and now again 2014 up until now. It's favoring this low level. Let's look at the monthly. We see we're at an all-time low area. So there's a very strong chance that the market could go higher. It's making these nice long moves up and down. Look at the daily. We see we're at that same level again, and it's dancing around this level. It's not just coming down and going right back up as it did here. This one, it danced around for a great little while, and then it went up. And this one is pretty much the same, but it seems like it's trying to go climb higher. And to me, it looks like it's respecting this level. It's bouncing along the, along the way, but it's definitely respecting that level. Just something to think about. Just, something to think about. Something that I like to do is when I draw my lines on support and resistance, if I have a ascending channel line, or in this case support line, if I see that I have a resistance ahead, support ascending below, it's running out of space. All right, if it was down here, it's closing in, it isn't really going above, it's running out of space, this one. And then eventually, as you know, it's going to either go down or up. That's the way I like to look at it. Does that make sense to everyone? Everyone is muted. Everyone here is muted. If you're just coming on, if you were here from the get-go, you would know that everyone is muted. This is not one of them training sessions where none of my training sessions, people are talking, disruptive, interrupting people, and that's not. I don't have that over here. So you will always be muted. You can use the questions column to communicate. I don't always have it open, but every once in a while we'll open it up if I ask a question for you to respond to. All right. All right, moving on. AUD/JPY. This market, I would have to believe it. I will watch this level. I would definitely watch this level. The market is ranging big time. It's ranging big time, but it's also trending, which is it's one of the same. It's ranging, but it's also trending upward too. depending on where you're looking at. This is the monthly. But right now, we're at like the midway between the move down and up. So if done right, you can make money either way you look at it, if done right. But the market is here. It's at a resistance level. So you could simply expect the market to possibly go downward. You know that along the way we do have lines and we do have other levels. Now this one is a sliding scale. If you notice, it's good there, which is at the bottom of here, which is at the bottom of here, but it's also good here, which is here. You see that? So you want to watch this level, and you're not getting in until you receive a signal. And with these dojis up here at this level, the market could be exhausted. It could be ready to go back down. Even if it's just to here. Or even here. It appears to be ready to go back down. All right, so I would definitely watch this and just see what it does. Don't get in too soon. Don't screw yourself over. All right, let's go with the AUD NZD. This one obviously is at support. So you definitely want to watch it, because this one could be setting up for a move upward. But based on these moves like this, came down, came up, came down, came up, this could push down further, and it could drop. If this one came here, push down. This one came up some, about a third of the way, push down. This one came up to here. This one could push down a little further beyond here. So I would say wait for the signal before you get into this. Now, of course, if you are trading, you could always, you know, for those of you who trade on the smaller time frames, the unfortunate part about that, while you might believe you're getting in early, or you're getting the most money by getting in early puts you in a little bit more risk than getting it a little later and letting everything smooth itself out. All right? Just to let you guys know that. Now, if the referendum has any bearing on the way the market is moving now, then, you know, of course, you still have to watch and see exactly what the market does to determine if it's going to respect your levels or not, or respect your decision to get in. And don't worry if you have not yet if you're just signing on, this is being recorded, so I'm not going to go back over anything. I'm moving forward. I've already covered the AUD CAD, AUD Swiss, AUD JPY, and AUD New Zealand dollar. This is the AUD US dollar. Now, looking at this market we see the market is trending upward. Then it started to trend downward. And the market could be going higher. I would want to see this. And of course, this is not going to be in line, but I would want to see this go at least above my line here because this right here this could be a well-respected support, ascending support level. But all levels are levels are not meant to be respected all the time. Well, let's say not all levels are respected all the time. Sometimes they get broken, but then they correct itself. So this could be the market pushing down based on a power thrust, and it could possibly correct itself by going back above, and they continue bouncing higher and higher. So I would say definitely watch this one, but just be cautious because, let's see. Yeah, I would just say, if you're trading on a daily, wait for a signal on a daily. That's what I would do. You want to get into the habit of trading, not setups not when you think you have a setup. Trade when you have a guaranteed setup. If you only traded when if you only traded when you receive an engulfing candle, because a lot of people like engulfing candles. If you only traded on engulfing candles on a daily, do you know how much of a higher probability you would be as a trader, or your trades would be if you traded only those opposed to just trading at random, just any and everywhere? You might not trade all the time, but when you do trade and you let the bad boy run, you'll find yourself winning more trades. Personally, I don't particularly like this setup. I personally, I don't have a clear signal. I don't have a signal to get in right now, is what I'm saying. But over time, as the days go on, the market will come back down to here and give you a signal to go higher. Right now, I'm not getting a signal right now. So, and just to let you all know, I normally do not, if I hold a trade over the weekend, I normally would not close it until Monday. When the market's open up on Sunday, whatever I'm in over the weekend, I'm letting it ride until Monday during the London or New York. I don't mess around with the Sydney or Tokyo session. I don't fool around with it because the market tends to do something totally different, and then it would turn around during the London or New York. All right. As I said, the Swiss markets are not really, they don't really move much. This was, you guys probably not familiar with that, but January 15th, 2015, Switzerland, a lot of your wealthy people were forced out of Switzerland from hiding their money in Switzerland, and their currency collapsed. And as you see, it's pretty much been, consistent at this level, just ranging at this level since then. So we know that at some point, this market looks like it's slowing, and it's also nearing, you notice, the highway point where it turns around. So I will watch this over the next couple of days just to see. You might get a signal going back down. And then if it bounces, if this is all that perfect, I would expect for it to bounce back down and maybe go a little, just to complete this move. It looks like it's creating a pattern of pushing down further. You could probably expect it to continue on, some sort of continuation. All right, CAD JPY. I would definitely watch for this one going back down. Of course, allow your signal to determine your entry. This one might be a swinging scale. But nonetheless, we know that this area here is well respected. So we can only expect for it to bounce or break. If it breaks it, we know where it can go. If it bounces, give us a reason to believe it's going to bounce, we know where it can go. All right, let's go to the Swiss JPY. This one pretty much, more than likely, yeah, it's pretty much the same. They normally run about the same, these two. This one is more than likely the same. Yeah, I would be looking for this one to be going down too. The great thing about some pairs is you guys know about correlation and all that stuff. So you find pairs moving the same, and if the CAD JPY and the Swiss JPY, if you catch them both moving alike, you can expect them both to, you can make twice the currency. All right? Just something to keep in mind. This one gapped down from the weekend. There's actually a number of gaps so far I've seen. And this is the Swiss JPY. So see, January 15th, this one shot up. And just like I told you guys, this was a catastrophic news event. As you see what happened this day, it shot up over 3,000 pips. And then by the end of the day, it pulled back 1,500 pips. This was out of, this was out of its norm. This push up. By the end of the day, you would have been, if you were in on a buy because you saw the market nearing this support level, and you already set up on it for whatever reason. You could have been. You could have made over 3,000 pips going up, close it, put in a buy because you know what I told everyone about catastrophic news events, and let it pull back. And even since then, the market is back at where it began. So you could have made money full circle. In almost 2 years. Fantastic. When I say a swinging scale, I normally say that when I'm talking about putting on a support or resistance level. If I could swing my support, when I swing my line, and if I could swing it up a little and it's still on, or like this one right here. This one, if I have it here, is good here, but you see where this one fell to. So this one is, I would consider this a swinging scale. I can have it here or here, and it's still good because it's so close to this one, but also close to this one. And also this is of a small volume. This pair is a Swiss pair. It's usually of a smaller volume. So the fact that it's at this level, we expect to bounce, you know. Euro AUD. I actually had this one on already, so this is kind of like a no-brainer. What you can expect. You see this is dancing at this level here. So we should be looking for a reason to think that it's going to go higher. If it goes lower, then of course we would deal with that accordingly. If you guys notice, if you guys and gals notice, this level is also good. Looking at the weekly, you can see it broken down, giving you a little bit more detail. The daily. So it's at that point again where the market may go up or down. All right. So that's the Euro AUD. Euro CAD. This market, whoa. Market appears to be pushing downward. And you know, this could be the result of what's going on. You know, the market has not, it appears it's not done yet, but hey, it's Sunday. We wait and see what it's going to do. Looks like the euros are all gapped down. So let's see something. See what you do when you're trading the market. If you see, one of the problems with traders is they see this great candle and they see that it's huge and they want to get in on it because the boy or their homegirl might hit them up and say, hey, look, man, you better check out the GBP AUD, man. That thing is moving down, man. You better catch it. And they go ahead and say, man, it is moving down. It's a big candle. You see it's moving down. So they get in on a sell because they think that it's going down. Well, the candle was bearish and it did go down, but how do you know where the move is? How do you know the move isn't over? And that's the problem. People, they get in on these moves too late and the move is already done or it's nearing completion. it might put you in a profit $3-4. You're like, I know if I got $3-4, which you could take the $3-4, but in your mind you think if it has gone down this far and I got in and I'm up $4 or $5, I know it's going to push down. I can get $100 out of this. You can get 100, but the move is already done. And that's what happens. People get in too late because somebody gave them a little nudge and the market turn around. Rather than waiting for the market to get done going down and then waiting to get in on a move up, or waiting until the move is done going up and then getting in on a ride down, they get in between. They don't know where they're getting in at. That's what happens. How many of you had that happen to you before? So you can't always get in on everybody's move. Everyone will, people mean well, but it doesn't mean that it's good for you. They may have gotten in early, but why didn't you nudge me a long time ago? Not that it's their fault. You still have to make the decision to get in. If you take the advice from someone, say, look at this pair, and you look at it and you say, well, shoot, that thing moved already 125 pips. I don't want to get in on that. I should have caught that from the beginning. At least get 80 pips. I'll settle for 50, but I don't want to take 3 or 4, risk my account. No. Just to say I traded it. Screw it. It's another one that's coming. So that's what we do. Just wait for it. Now, so that's the Euro CAD. And this one you might want to just let the market get done doing what it's doing. You can get an idea. You could draw some lines on and get an idea as to where it could go. You see it's nearing that area. Doesn't have that far more to go. But it could already be at the low area where it's eventually going to go higher because the market could be exhausted. One of the analogies that I use, most of you have heard it before, those of you who are students, you put 2 guys in a ring. One of them slugging away while the other one is just blocking. If you got in a ring and you start throwing body blows and punches for like a minute long, 1 minute long you'd be gassed out. You might take another 45 seconds to just block and let your opponent have his moment in glory to shine. But that's what's going to happen. You're going to change hands. You get a breather, let him punch. He get a breather, and then you go at it. So that's just something to keep in mind. The market's going to reverse. It's going to reverse. The market will become exhausted. All right, so that's just something to keep in mind. The Euro Punk Swiss, very, looks like all the Euro pairs have taken a nosedive. But do not fret, you guys. Do not fret, you guys and gals. The market will go down because it's going to go down, but it's gonna return. The question is, are you trading too heavy to weather the storm? Now, the formula that I have that I teach my students, it allows them to remain in a market, to trade at the correct volume instead of, getting blown out. Common sense is if you see that it's a bad trade, get out of it. That's the bottom line. All right, the Euro Swiss, very similar to the other Swiss pairs. If you notice, after its plunge, it came back up, and it's at this level of, it's just at this level, just humming. So, the market, it was going towards it. The market opened, and you see where it is. So all of the Euro pairs are taking a nosedive. But remember, you don't have a signal, you don't get in. If you're trading at the right volume, you can weather the storm if you choose not to close your trade. But if you close your trade, which direction are you going to trade in? There's only two directions. If one is wrong, the other one is right. So you got to make the right decision. Euro GBP. I do not trade this one. No, is that the Euro GBP? Where's my Euro GBP? Okay, I got this one out of order. I keep them in alphabetical order. All right, the Euro GBP. Regardless of what's going on now, I would be expecting for this one to, be moving down anyway, at least to around this level. And this one could be a swing scale because you have these wicks and stuff down here. So this is ideal right here, but they could push down and back up to here and go up. So I would look at this in its immediate price action for it to, if what's going on right now is not the result, because like I said, news can affect any currency pair. If what's going on right now is not a direct effect of, this Euro GBP pair, then I would expect the market to go down from here, and then I'll wait for the signal to go down or up. All right? That's just my take on it. And I want to say something that's important. You can have the best setup, like I said before, and the market will not respect it. It will go against everything you thought. So although we're sitting here looking at what could happen, you got to look at what actually happens, because it's what happens that determines, where the market's going to go. And even then, it's not 100%. It could still go down further if it turns around. All right. Now finally, whoa, look at that. Now let me go back to this one. No. Let's go back. Let's go forward. Euro JPY. This market here, it's giving me all the reason to believe that even before the open, I would have been in, had the belief that it will probably, actually not. Let's see. See, all you have to do is catch. Oh yeah, I would probably I would have been watching this one, and the fact that it's pushing down. I would definitely be looking for it here as a place for the market to possibly come down to. But this could be the result of what's going on. The market is pulling back hard right now. It's pulling back really hard. Let's see. Oh yeah, see it pulled back. See how hard it pulled back? And respect it. Yeah, there's definitely, whatever's going on is definitely affecting the market. That's for sure. But the JPY, like I said, I'll be looking for here as a place to watch the market. But honestly, with all that's going on in the market, and I wish that, I guess this probably wasn't the best time to have this training if with news that's coming out. A lot of these pairs, when you have news, it's best to probably wait until the news is done and then reassess the market. Look at the market and see, okay, what's going on. Because news has its own personality and temperament. It's not of the normal ebb and flow, if you all realize what I'm talking about. It's totally out of bounds. It's not normal. All right? So that's just something to keep in mind. I know that there's talk about news going on. So once everything is realized, you could expect the market to return back to or let's say resume back to normalcy. All right. There's definitely a chance for you guys to make currency, but just be careful. If you're trading this, just be careful. Sometimes it's best to just wait and not get in if you're not sure of yourself. And it's okay if you're not sure. We build up ourselves to eventually, be confident and know where the market is going to go. So this one here, this is the Euro NZD. The market is pretty much at an area where I would have considered to watch. This piercing is not that big of a deal. I would still look for the market to come here and then make its own decision if it's going to go higher or lower. So I would say with this one, watch it at this level. It's at a level. Watch it. If you notice, even looking at the monthly, since 2012, mid-2012, we had the market at this point. So, just watch it. Because anything beyond here will be an all-time low. Anything in 138.5, that will be an all-time low. So you all know where you are right here. Now I'm giving you all this analysis in a long-term, it's a long-term analysis perspective. is from a long-term analysis perspective. All right? Because if you caught a move like this on the Euro NZD and you said, wow, like, and you just wrote it down, I mean, straight down is 9,000 pips. All right? So let's go back to the daily. Quite a few more to go through. The Euro USD, another one that moved pretty heavy. If you guys notice, it's at this level where it's been for a minute. The Euro USD is at an all-time low since let's say early to mid-April, or early to mid-2014 when the market just collapsed, resting at like the 104, 105 level, and then as you notice, it's been ranging, and it's at that same level again. So what do we expect when the market is at this level? We expect nothing more than what it's always done, and bounce off the level. All right. So don't let the current news that's influencing the market fluctuation change your opinion about where the market is going to go. Now, we know that it can totally turn things upside down, but we know also that usually the market is only reacting in its present moment, and it's not going to continue in that direction. All right? But we'll see. We let the market, we have our own assumption or belief about the market, but the market can tell us better. Sometimes you just have to wait for it. All right. So yes, if this candle closed right here, right now, I would still be believing that the market could go up or it can go down. But I will be thinking that there's a chance that it will go up based on what the market has done over the last year or so. It's always bounced from this level. All right. Just something to keep in mind. Now, all of the GBP pairs, I bet, because normally they all run about the same. They probably all gap down some, and they're probably all like this. Let me see. Yeah, they all gap down. Some more than others. Oh yeah, they all gap down. For these pairs, I would just say wait until the market is done with what's going on in the market. A little pump news is out that's making the market move about. I would just wait, because normally this market isn't moving like this on Sunday. But if I had to give my own opinion about where the market is likely to go, I would be thinking long. All right. And if you guys know, all of the GBP pairs are pretty much the same. You look at this one, they all look similar. Some are a little farther north than others. Some are a little slower, like the GBP NZD. But nonetheless, they're all favoring the same type of move since the summertime. So my opinion of this move, although we have news that's influencing how it's moving right now, I would have to say that my belief is if it can get away from and this is a common area, if it can get away from this area upward, I will believe it's going to go up. As long as it hangs around this area, and this area has been respected since the Brexit, I would have to believe that it's still undecided as to which way it's going to go. But the market will and definitely show you better. And this is for the GBP and ZD. This one is a lot different. I'm going to put one here because this wick, look at that. Market touched down here, and look where it touched down or touched the market at, right there. So if the market was to break this level here, then my belief is that it's going to go higher. All right. If it does not, and if it keeps going down, even after this punk news is out, then I would believe that it'll probably go down. And this is pretty consistent throughout all of these pairs. I mean, if this one doesn't break this level with a clean break and go higher, then I would believe that it's going to continue at this level or go lower back to recent support levels. That's the same for the JPY. This one here. You notice they all move similar. This one, you had a little hesitation there, but it's not that important, it looks like. But here is where you had some, and that's what the market is. The market went straight to that level, and then it closed. You see where the market is. So if it breaks these levels, then we know it's going to has room to go higher. And this one is sort of a swinging scale, this one. But you see where it's at. This one is pretty much consolidated. It wanted to go higher, but today's opening sort of giving it a little reason to remain in that consolidated state. All right. Last but not least, the GBP USD. Let's see, GBP JPY. If I would definitely watch this one. If the news that's out, if it doesn't influence the market to go higher, if the news is over and it's done, I would expect this market to go lower. All right. And let's see. This one, because of all this consolidation, especially after it had 3 powerful days here, pull back, another day, pull back, consolidation, I will be watching this. There's a chance that this might be so strong that it will not go higher. Might go lower first to go lower, then to get the nice jump off of the diving board to go higher. All right, that's what I consider like a pullback. It's like running off the diving board and jumping off the diving board at the swimming pool. You go down, hop up, and it springs you higher. All right. So the GBP USD. I normally, especially during training, change the colors of my levels. That's not really that important. Yeah, I will be waiting for this one. The GBP USD is not, this is like one of my least favorite of the GBP pairs. But nonetheless, I will be watching this one. The fact that this one went straight up and stopped gives me reason to believe that, and it's pretty close, pretty darn close to here, not too far off here. This might be a very significant level to watch out for. That's right, we already checked that. I will be watchful of this one at this level. As I said before, after the news is, after everything cools down, I will wait to see what everything, how things close on Monday and maybe even Tuesday before I really, just like I did during the election week. During the election week, the news is just all over the place. Everything was moving different. So it's best to wait and just see how things turn out, then get in, All right, New Zealand dollar, CAD. Might be in an uptrend. Yep. And this isn't going to be exactly straight, but just want to get an idea. Let me see. It's really not that bad, but it looks like this one is definitely trending upward. So this one could give another solid push down or go up. But what I would do now is break down this area. And so let's see, let's break down this area. I would definitely wait for another signal or wait for another reason to get in. I wouldn't just get in on this right away. But in a long term, it's definitely going up. I definitely have plenty of reason to believe that it's going up. I would probably Can you guys hear me? All right, just want to make sure for some reason I lost connection. I would definitely be thinking, I will be thinking long term on this one. But however, right now with the news and with where it is. If it has a problem breaking this level, then I'm thinking it's going to go higher. But I would just watch it and see what it does. I should have known this is the Swiss. Yeah, I would like to put something here too. And if the market has issues with breaking, because you see, like I told you before, this it's getting smaller. Doesn't have that much more room to go. So it needs to figure out something, or it's going to burst or down. So it's running out of room. So it need to realize something. So let's see. You all can still hear me, right? All right. Let's go with the NZD JPY. At first glance, this one looks like it's ready to go down. But however, there's that little cup effect. And this could be the reason to believe that it's done. It's done at its bottom. In which this level is very, very strong. I would definitely have to believe that this thing is going to go up. Now, I'm not talking about in the next day, long term, right? And remember, this move is already begun. So long term, we can expect it to go higher. The market retraces all the time. You think of a retrace as like, just like, you know, all the market does is bounce up and down. That's all it does. Just like a pinball machine. Pull back, the ball it jolts, bounces off the side, boing, 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 and it just bounces around. That's all the market does. But it's going up and down. So when you pull back, when you pull that lever back and you hit the ball, that pullback is just like jumping off of a diving board. Goes down, springs forward, goes higher. And that's what happens. Pull back, higher. Pull back, higher. Until it cannot go higher. All right? Some pullbacks might be a pullback, but then it just changes course. As far as how long the run up, we wouldn't know. We just let, this is answering, let's see, who was that? Anna, this is answering your question. I wouldn't necessarily say months, but I would say it's definitely looking like it could go much higher than where it is. That's for sure. All right, so if there is no news going on right now, I would have to believe that this thing will probably go down. I mean, look at this. I mean, this is like a no-brainer, this one. The market loves this level. So that's my take on it. So this pullback might pull back as far as wherever, but then I would believe that it's going to come back to this level, test it again, and more than likely break it. But it could go down and test it and go down further and then say, all right, well, the pullback to here wasn't enough. Let's try it again. Okay, so I noted the pullback to here wasn't enough. Let's go further down and see if this is enough. And then that's when you break it. Because I relate Forex to like renovating a home. When you have to use that sledgehammer to demo a property, you know, you might not need the sledgehammer for a half-inch drywall. You might just need a ball-peen hammer. But when you get to the bathroom, we had your green board, you know, that could be 7/8 or 3/4 of an inch. You might need something with a little bit more back to get through it. So that's basically, you might need to go down further to jump off the diving board to spring higher, if you get what I'm talking about. All right, so let's go forward. NZD USD. And I don't like the fact that the news is going on right now, because it doesn't really, it's almost forcing you to have to look at things a little differently. But I want to let you all know that if you just be patient, let the market finish doing what it's doing, and then you reassess the market in its realest, simplest form, then you can realize where it's going. Because all this is doing right now is just throwing people off. People are literally losing thousands of dollars right now because they are trying to trade on something that's they have no control over. They think that it's the end of the world. Not necessarily, but they think that they trade it like it's the end of the world, like they got to get all they can right now because it's not going to be open tomorrow. It's baloney. It will be open tomorrow. So the NZD USD, that's easy to see that it's trending higher. If you will, that's pretty decent. When we look at this, so we would naturally assume that it's going to go. See, these are day candles. It might go down today, go down tomorrow, but then it might spring up and they keep going. And it's those who are able to weather the storm of it going against you maybe a day or two. They're the ones that win because the market goes right back. That's why having an aerial view of what's going on is better than looking at just the minute chart. Because the minute chart, this is all you see. And it's so many ups and downs, you'll be lost. So if I see that it's touched down, pulled back, and it's only going to go higher, I want to get in at a low point and ride it higher. Just like if it's going down, I would like to get in at a retracement area and ride it down. All right? That's just me. I don't want to fight it. So with this one, I would, I could draw some more on and just see what's what, but definitely want to keep this in mind. That stuck out. So now you see how much room you have. Not a lot. It's going to break it. We see what it's been respecting since a year ago, year and a half ago. So now we just believe that it's going to continue going forward until it loses room and maybe break down or go higher. But I would have to believe that it might be a little congestion over the next couple weeks, week or so maybe. And then it's going to break higher or it's going to break to the downside. But you'll get the signal. Regardless, the direction that it breaks in, it's going to run. It's going to run. I guarantee you that. All right, so let's go forward. We're nearing completion. We're rounding. We're just passing third base, you guys. Stick with me. All right, USD CAD. USD CAD. This one here. Oh, how obvious is that? That looks tasty. And it might not be as straight, but it's respecting it. But the only thing that I do not necessarily like about this one, let's see. So we know that's good. Yeah, I would definitely watch this level here. It's a reason why it's respecting this level. I would say watch it. we see where the market came from, and we see what it's trying to do. It's probably just about at the 50% retracement. It's getting close, but regardless, let's see. Let me just draw some lines on just to get a better idea as to what's really going on. If news wasn't out, and if this wasn't news, this is on the daily, I would be expecting this market to go up. Only because it's respecting this level. It's respecting this ascending support level. That's for certain. Now, yeah, that's the thing. I would have been expecting this to come down closer, at least, because there's a lot of rejection up here, even on the daily. There's a lot of rejection up here, and this right here reminds me of the GBP NZD. When the GBP NZD on the daily had all this rejection up here, it went down. All right, and then when you go forward, looking at the USD CAD, has a lot of rejection on the daily. It's been respecting this level. So if the market comes down to this level and breaks this level, then I'm thinking that it's done with the retracement and it's going to go down and continue on. All right? Because it was once going up. This, it seemed like it's having a hard time climbing. Like these pulls were pulling up a lot stronger, and it just like it pulled down stronger. And now the pull down was strong, but the go up is choppy. It's trending upward, but not at a fast pace like it did going up. So this resistance here might be the determining factor of if it's going to go higher, because if it doesn't, it's going to go lower, and I'll be expecting it to break this level for it to go lower. And then of course, once it gets at this level, then you should know that it's going to go lower if it breaks this level, because this is where it pivoted from before going higher. So this pullback here is to allow it to go lower than here. If you look at it from a monetary, analytical standpoint, from a numerical analytical standpoint, based on the value that it went up to here, it would need to go below here in order to go lower. If my diving board theory is correct. I'm thinking that it is, because it's having a hard time going up, but it was an easy time going down. So if this pull down is a lot easier than the way up, then I know that, of course, gravity, it's always easier to go down. But it was pulling up easy. Why isn't it pulling up easy now? Logic will tell you. A lot of this is just logical. You just got to think logically. If it's having a hard time going down, but it went up easily, I mean, if it had a hard time going, if it's having a hard time going up, but it once went up real easily, and you see it went down easily here, then I would probably have to believe the rumor that, at least this rumor, that hey, I think it's going down. It's going down. Yeah, I would jump on board with that one. I would go down with it. That's just my take on it. But the problem is we have this pump news is out, and it's sending the market upward. But remember, as I said before, It will not remain upward if this is just news, if it's not supposed to go up. It's going to pull back and go lower. All right? But we have to wait and see. That's my take. Congestion or resistance. You know, all the way it went up, it's going against what it really wanted to do. It went up strong. It's ready to go down. If it was going up strong, it's having a hard time breaking it. What could take the market up? I bet news can. The news could take it up. But once the news is all done and the dust clears and settles and the market is back to its normal strength, not this punk He-Man strength, what do you think is going to happen? You're going to see the USD Swiss go right back down to where it was supposed to go, probably. If that makes sense to everyone. USD JPY. I know that this one was going up for the longest. And now look at what it's doing. It's respecting this level, which I had this one drawn on already. And it's respecting the level. It's very simple, this one. So I would wait until the news is done before I got in. But I'm going to tell you something. I believe that it's going to have a hard time breaking this level. If it was already going down and the news is in its favor, for those of you trading the USD, the US JPY, want to sell, you're loving life right now. That's just my take on it. Because the market was respecting this, or the market was sort of respecting this, and then it broke out of it. It was respecting it. Then it broke out of it. And then you sort of look for another one. This is what some people do. I don't always do this, but some people do this. And you say, okay, well, it broke out of this one to go up. And then now you create a line this way and you put one this way. And you see it touch down there, which is all aligned with this. And it broke this way, so now it's going up. They have a hard time breaking this one. So you can pretty much break down your chart a lot of different ways, but it'll give you clues. Maybe not 100%, but it'll give you clues. It'll give you an idea as to where it's going to go. All right. So that's for that one. USD peso. This one has been dancing around this level for the longest. And I'm still waiting on it. I'm going to wait, because I know this one can move. So this one here, we're just waiting on it. Just wait for it. Just wait for it. You see it's been trending upward. On a monthly, this is the highest it's ever been. It's making new highs. But last month, see, this is, which is another reason why I had this training today. We're at the beginning of a month. Every candle on at 5 o'clock when the market's open, Eastern Standard Time, that was a new candle on every single, well, actually not. What's today? Today's the 4th. No, I take it back. You're still at the beginning, but it was pretty much a new candle everywhere across the board. You know, but of course Friday would have been, what was that, Thursday? Thursday would have been actually, you know, a new candle. But if Thursday had happened today on Sunday, it would have been a new candle on every pair, on every time frame once the market opened. 1 minute, 5 minute, 15, all the way to the monthly. Because it's a new month, it's a new week, it's a new day, new 4 hour, of course, because it's just opening up. So we're watching this. We're watching this. This market could essentially go up to this wick, fill it, then back off and close here, or close down here, engulfing. For those who saw it come up to here and said, you know what, if it comes back up to here, I'm going to watch and see if it backs off. When it backed off, they put a sell in. You wrote it down and stayed in. Like, that's what happens. You got to catch it. That's why I'm waiting on this one, because it's setting up. It's setting up perfectly. I'm waiting on it. And I don't care about getting in up here. If I get in here, I'm fine, because I know it's going to go even further. So if I miss out on 300 pips, it's okay, because we have 2,200 to the bottom of here, 2,500 to there. And if you want to take it a little further, if you want to be a little bit more conservative, 537 to there. Still not bad. And based on this pair, that can be done in a day or two when it's moving normal. This was just, I noticed when it's consolidated, it's not moving, as fast. But when it's trending, it's just a lot of power behind it. Silver. Silver. Ah, yeah, this one is creating some kind of little cup effect. It can go up. So I will watch this one. But because the move is trending downward, don't be surprised if it goes up, it goes to a certain level, and it maybe turn around. Because it's sort of respecting this, so it can come here and then push down further as it's been doing. So let's keep an eye on this one. You see it's sitting at this level, and we just wait for it. And gold. Gold and silver tends to move identical at times. You guys notice that? So this right here, I'm going to put something right there because that's where it first landed. Then it started pivoting from that point, breaking below but back above, and it's at that level again. So that being said, although it's below it, that doesn't mean it's going to go lower. This is a pierce. It could have just powered its way through, so it can go higher. And let's see. I would keep this. I would look at this as support. The market can go higher. All right, that's what I would look at as it. That's what I would look as. I would look at this as. All right. Definitely wait on it. I'm not going to go over everything, of course. That's everything that's covered inside of the training. I want you all to know that the only thing you really need to know about the market, because most people, they get caught up on all the other things. Just know that the market is going up and down. That's it. It's going up to resistance and down to support. Everything in between is just whatever. So remember that. That's very important. Lastly, we're going to look at oil. Oil is like the Euro USD. I'm going to move this one down there by the Euro. Matter of fact, let me put this back. Nah, put it over here. Nah, put it back. I don't like the, what did I do with it? I don't know what I did with it. I want to show you guys something. Oh, here we go. Let me put this over here. Put this here. And now let me go back to here. And let me go to Market Watch. You guys see something that helped me out. I keep everything in order, alphabetical order. That way, whatever I want, I can easily go to it, and it's there. All right, so looking at the daily, we look at the daily of the Euro USD, and we look at oil. They both run together. When one is going down, the other one is pretty much going down. Maybe not always at the same time, but in a long term, yes. If you see that, and you look at this, long term, yes. April, May 2014, down. It was done early 2015. Here, May 2014, moved down like January. One of them is a little slower, a little faster. All right. So when you look at, and I just want to show you guys that, and another one, sometimes it tends to want to move similar to them, but it's not as close as those. Let's see. Actually, let me see. That was the daily. Let me do this, do that, check that out. Well, it was moving down, but it didn't start like that one did. So I'll take that back on that. But yes, definitely oil and the Euro USD. They definitely, if you notice, they move similar. All right, but then oil right now, you gotta watch oil and the Euro USD. See, the Euro USD is at that low, like I was telling you, and it's ready to go up. But however, what you want to watch out for is that, see the pullback? See that pullback? Look at that pullback. See, that's what happens when you're in this market. Dealing with the news, it'll pull back on you. And you can get everything that was missed on the way down, you can clean up on the way up. But nonetheless, what I wanted to show you was what was the point I was making on this? Yeah, the oil is at, well, the Euro USD is at that low point and wants to go higher. And since it fell after 2014, it's been ranging. So it wants to go higher. Oil is the same way. Once it fell, it's been dancing around and wants to go higher. See, this one had, if you guys see this, went up, came down, went up, came down, went up, and it's not going back down. The Euro USD had one that was actually, you can see it better. Where was that at? Was it on a daily? Up. It's a nice push back, up, push back, up, push back, and each time is at this low. And then, so we expect it to go higher. But with oil, I would definitely be expecting a run up. It's quite obvious as to where these markets would go. So when a market reaches your resistance level, then you just wait for it to break it, and then once it breaks it, then expect it to go higher or lower. You know, the whole reason for this training is basically to give you guys a doorway into how to trade the market simplistically. And hopefully, despite the fact that we have news going on, you guys are able to trade on a few of these. And I wish that it wasn't happening at the same time. But you all know, based on what I told you, okay, once the dust settles, you can realize where the market is likely to go. Stuff isn't that hard. So I'm just curious. Someone asked, it's funny that you say that, Darnell. Darnell asked if He asked if I use Fibonacci to help determine entry and exit points. I do not. I do not use Fibonacci. In fact, actually, when I meet Fibonacci, he and I are going to have some words. Because there are so many people who, and don't get me wrong, is there anything wrong with Fibonacci? No, but I don't have to use Fibonacci. I am Fibonacci. Now, I don't mean to sound like Kanye West, but I'm just saying I can create my own levels. Fibonacci is only support and resistance. That's all it is. So do I need to plug my Fibonacci levels on? Do I really need to do that? Do I need to plug them on and see? You know, I don't need to do that. I could show you all how Fibonacci is. If I broke down my chart, and showed you, tighten up everything and showed you, it's nothing more than what you already know. If you know how to draw your support and resistance, why you need Fibonacci? Unless you don't know how to draw your support and resistance. But the problem is Fibonacci is only good for the area that it's in. I like support and resistance because they can go back in time. I don't need to readjust my levels like that. I really don't need to. But that's just my take. That's just like me not using a stop loss. If you get in at the proper volume and you're trading at the right, if you get in at the proper level, you're trading at the proper volume, and you're using the perfect entry for entry, you can watch your trade when you first put it in, let it go into the money, and once it get a couple hundred pips in the money. And what I teach my students to trade are the pairs that move. You don't have to watch a turtle. You know, we want a rabbit pair. We want a pair that's going to move. So you let that pair go on the money a couple of days, and you don't have a reason to get out. If you don't have a reason to get out, stay in. If you have a reason to get out, get out. So let your trade do what it do. Let it just mature. Let it mature. But not to get off on a tangent. I don't use Fibonacci. I don't use stop loss, take profit. I use take profit one time. And I don't like the idea of having to go in and set things. I just like to just get in and get out. If I can't sit around, if I got to sit around and watch it, I don't need to be trading. I feel like if I can't put my trade in and watch it go into the money and have confidence that it's going to go into the money, then I feel like I shouldn't be trading long term. You know, I don't want to expose myself to those folks, quote unquote, who watch where your stops are at, just to purposefully get you out of the market. I don't care to have that type of exposure. Nor do I want my students to. Because I think we look at our charts enough, even if we're not sitting there glued to it, we look at our charts enough to know, okay, this is pulling back too far. I may want to get out. Or, man, I'm 300 pips in the money. I'm going to let this ride. So I don't leave myself open for those folks to pull me out of the market. If I want to get out of the market, I'm going to get out because of the situations it warrant me to get out of the market, not because I'm forced out or I'm taken out of the market. And when you're taken out of the market, it's because you're trading too heavy. Or you said, hey, look at me, y'all. Look at me. I'm right here. Look at me. Take me out. I'm called a stop loss. I want to lose $50. Nope. You won't get me like that. See, that's what they teach you. That's what they teach you, which it can be effective. Don't get me wrong. I'm not going against the idea or the concept behind it. But I know as the kind of trader that I am, no, I don't find it effective for me. Some of you might find it works well because you trade short term. You know, but as a long-term trader, if I'm 600 pips in the money, you know, I feel like I'm good. I don't need to trail and stop either. Although some might argue, man, that's smarter than using a regular stop. Well, to each his own. I just, if I can't watch it, because the way I think is the same reason for me to get out of the market is the same reason for me to get back into the market. I want you guys to think about that. So if I sacrifice a little bit because I may have waited to get out of this market, it's the same reason for me to get back into the market, going in the opposite direction. Think about that for a second. So what I lose on one, I'm going to gain on the other. I'm not here to take it all. Like I said, I'm here to get currency. I'm here to get most of the pie. But I'm not here to get just a piece of the pie. So I want you all to think about that. Like, think about it. Like, get as much as you can, but don't set yourself up for failure thinking that you're going to get rich like overnight. Because if you only make $999 when your goal was $1,000, and you're having a baby over that, you know, that's going to keep you back. So just do what you can and go from there, you know. But do it the smart way. But I definitely appreciate you guys tuning in. This is a long training, and I pushed it out because I know that most of you are looking at this for the first time with me. Most of you are looking at Forex for the first time, period. But you know, you have to realize that the market is doing the same thing each and every day. But I definitely appreciate all of you. I'm glad that you guys took time to sit in on this training. You know, of course, I will not be sending a link to any recorded training. I will not be doing that. But what I will do, I will post it inside of, I will post it on YouTube. Let me see, Carolyn. When you're looking for the entry, do you enter in the same time frame? I always enter in on the daily. I trade off the daily. All right. There's only one time in the market that I would trade off of there's only one time that I trade off of the hourly. But I always trade up the daily. All the time. So I want you guys to I'm glad you guys took part in this. I really am. A lot of people had left, came back. A number of people messaged me and said that they had to go. I realize that. I know that not everyone's going to be able to stay. But regardless, for those of you who have, you know, stuck around, that's great. I always enter off of the daily, but however, I look at all of the time frames above. I never look below the 1 hour at any time. The only time I ever look below the 1 hour is when I'm training, and it's a purpose behind it. But I never look below the 1 hour. The only time I look at the hour is if the market is consolidated. That's it. But you know, a lot of the gaps or the questions that you all have, you know, of course, I got to be real with you all. I'm not one to make you guys feel any certain kind of way. I have to be 100% with you all. It would do me a disservice to give out everything here when I have students who this is what they come for. This is why I have students who are loyal to the movement, because they know that I only provide certain stuff on YouTube. But a lot of what I have here, I went a little deeper in on, and I showed you guys, I gave you guys a lot more than what I had originally planned. I planned to only give you the currency pair analysis, but you know, hey, you know, I want to give you guys a little bit more so you guys would know I'm not just somebody who's just talking a good game. This is what I do. This is what I enjoy trading Forex. I enjoy training people, you know. So if you all have questions, you can feel free to ask me any question you want. Do it by way of email, but know this, that I will only answer questions that will that are like surface like, that are not like me giving, because I still have to respect what's exclusive to my students. And from a business standpoint, everyone, a lot of you on here, you're on YouTube, you're on Facebook, Instagram, even YouTube, some of you, and everyone is an entrepreneur. So everyone respects the position that I'm in. So, and I don't have to get too deep into that. Everyone knows. I'm just happy that you guys are here, and I really want you guys to know that even with what I've provided more of tonight, you guys can take this and really run with it, because there are hidden jewels in everything that I do. Everything that I do is timed out. Is everything is mechanical. I know how far I'm going to go with everything, and I know what I need to say in order for someone who's more inclined to take notice and listen and put it together, align everything, all the dots, and have that you know, that magnetic force just drive them forward, opposed to just being like, okay, I'm totally lost. But at the end of the day, how many of you can honestly say that you guys have taken something away from this? Wow. Yeah, that's amazing. And I really do appreciate it, you guys. I really do. I really do. And let me now see. Let me see if we have. Hey, Bianca. Just curious. And Joel, just curious. Have this opened your eyes? Because it was you two that actually gave me the extra push to, you know, make this happen. So have this opened your eyes? Have things been explained in ways, although it's not everything, have this answered questions for you too? And just to let you guys know, just to let Bianca, to let you and Joel know, people are saying thank you. People are thanking you too for, the conversation. Everything is done timely. It's a reason for everything. Although it was a thought in my mind for a while, it was the conversation I had with those two individuals that said, you know what, I need to have it like right away. Yeah, I'm definitely happy that it's answered your questions. I know that, and everything is done by design. Know that. Everything is done by design. I don't I present things in a way for you to be intrigued, for you to want more. I focus on not, usually I don't come into training with, although I did at one point, I came with a syllabus. I came with like an outline that I had followed. Then I said, I'm not an outline type person. I like to just go at it and just let it flow. But you still have to have, I don't want you to take that just going at it into the market. You got to have a system or a plan in there. But when in terms of learning, I think about, is there a way to present this information for 85% of the people to get it? And that's what makes the difference. That's why you all are here. And that's what I love best about this, when I can get the positive feedback. Really, it's not even about the positive feedback. Because sometimes I've had a few people who've came along and they told me that, oh man, I remember this one guy, and I hope he's not here because everyone that messaged me said that they wanted to come, I'll let them in. But I remember this one guy, he said to me, he messaged me for about a couple weeks straight. And then he finally found the time to get back at me. And then he joined, had one training, and then messaged me and said that he wanted to get out of it because, or he wanted a refund because he wasn't happy. He felt like what he learned was what he already knew. And so I said, all right, so if you already knew this stuff, taught to you the same way that I'm teaching you. And he wasn't straightforward. When he messaged me, one thing he messaged me, when you have an issue with someone, you go at them face to face, or in this type of realm of how we deal with things, we go over the phone. Like, I want to hear your energy over the phone. I want to feel you. Like, what's going on? You have an issue? Let's talk about it. So instead of him contacting me direct, he texted me. Okay, that's a slap against him. And then he was afraid, I can sense that he didn't want to tell me that he felt like my training wasn't all that I said it was. I'm man enough to say that in front of everybody because everyone across the world is going to listen to this and hear me say that, well, I had someone who said that my training wasn't what I made it out to be. But yet he felt sincere to say it through text, but when I put him face to face with me, he wasn't just thorough enough to tell me, yeah, it's not what I thought it was. I already knew it. I literally had to tell him, listen, if you feel like it's not that, then just tell me. I pulled it out of him and he said, yeah, I felt like it was, I already learned this stuff before. And I said, well, listen, since we're being straight up now, because all I wanted him to do is be straight up and tell me. Once he finally said it, then that opened up the door for me to be straightforward to him. And I said, listen, since we're being straightforward now, let me tell you, if you're going through this training and you say you've learned this before and you're still seeking counsel through another mentor, then the process of elimination makes me believe that the problem lies within you, not the training. Because if A, B, and C is teaching you the same thing and you're not grasping it and they're all successful, quote unquote, then who's the problem? When I told him that, he said, oh, yeah, man, you're right. I see what you're saying. You're right. And he reasoned with me. He still left, but he realized that, you know, I think at the end of the day, he just wanted a refund. I think that's what it was. He wanted a refund. That's what it was. But he didn't get a refund because he had already attended the training. And I'm educated. I'm smart. I know that if you sit in on a training, then you have to, you receive the information. So you got it. It's just you didn't know how to apply it. I can tell you everything till your face turn blue, but if you don't learn to apply it, then it's just useless talking. It's a waste of time. So I just want to leave you guys with that. I'm glad that you guys sat in on this. It will be processed and uploaded. It's now 3.5 hours long. So and I can go longer, but it's Sunday, and my family is waiting. So I definitely appreciate you guys, and I'll talk to you guys real soon. Real thankful for all of you being here. For those of you who have been subscribed and loyal, those of you who have just found me, you just happen to take advantage of this opportunity. It wasn't by chance that you found this opportunity at the time that you did. Some people are subscribed but have been so busy and couldn't even catch the training. So with that, it's a reason why all of you are here. And at this point, I'm going to end it with this. You guys can use the information wisely. If you all need further training, you all know where I am. And I definitely appreciate all of you. All right. And until next time, you guys have a fantastic day, a fantastic night. And for those of you who I've inspired and I've been in contact with directly, I appreciate you guys supporting this. And I'll talk to you guys soon. All right. Peace.